And they had 2.5 billion raised on the $1.8 billion hole. They were good.
Yeah.
Until Mr. Thiel and the PayPal mafia said, take your fucking money out. $42 billion in one day.
Yeah.
No bank survives that.
No.
None, zero.
No.
There is no bank, right? You think your money's safe in a bank? Bullshit. If there is a bank run, you're not safe.
The bank crisis and failures had significant implications for the financial sector and the broader economy. Banks borrowed a record-breaking amount from the Federal Reserve, indicating financial stress and the need for liquidity. This situation reflects a lack of confidence and potential solvency concerns within the banking system. One implication of the crisis is the risk of a credit crunch. As banks face difficulties, there is a potential for rating downgrades, defaults on loans and corporate bonds, and a deterioration in credit conditions. This could create a negative feedback loop where declining credit quality and reduced lending worsen economic challenges. One implication of the crisis is the risk of a credit crunch. As banks face difficulties, there is a potential for rating downgrades, defaults on loans and corporate bonds, and a deterioration in credit conditions. This could create a negative feedback loop where declining credit quality and reduced lending worsen economic challenges. The implications of bank failures extend beyond the financial sector. Such a crisis can have spillover effects on the broader economy, affecting consumer and business confidence, investment decisions, and overall economic growth. Policymakers may respond by implementing regulatory reforms to strengthen the resilience and stability of the financial system. Mark Yusko, an investor, has shared insights into the banking crisis. His views shed light on factors such as systemic risks, regulatory issues, economic conditions, or other contributing factors to the turmoil in the banking industry. His analysis offers a unique perspective and provides insights into the broader implications of the crisis. To gain a comprehensive understanding of Mark's insights and opinions on the bank crisis, it is recommended to watch the video till the end.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
There's a video going around now, this one's spooky, of the Banking and Finance Committee talking about bail-ins. Right? What's a bail-in? A bail-in is where they seize depositors' money. And the way they talk about it is, well, we have to create like turmoil so they don't notice it. Mike, you're on video. Like this is recorded. And we are not that far away from Cyprus, 2012, where you woke up and 3/4 of your money was gone. So I'm not saying it's going to happen tomorrow.
Yeah.
It's the fact that people are talking about it. That's a spooky thing. Look, we have a system since 1913 that has fomented the creation of an elite class. And until somebody stands up to it, it's not going to end. The problem is the people that could stand up to it are owned. And I mean that term intentionally, by the elite class, because it cost $100 million to become a senator. No one that I know has $100 million to blow becoming a senator. So they got to get it from the elite class. And you want to go on a really fun Google search tonight? Go down the rabbit hole of Mr. Thiel's relationship to the Koch family. You'll love this one. We haven't had many periods in history, right? We had one in the 1930s that led to the debacle of the 40s. We had one in the 1860s in the UK. You'd have to go back into the probably late or mid 1700s before that. So it doesn't happen very often where the interest burden exceeds the capacity of the said empire to pay. And what it necessitates is a complete reset, like literally a jubilee. And again, it's what the UK did in the 1860s. It's kind of what we did the 40s, kind of. I mean, it was a little bit offset by the massive expenditures for the war. which that's another one, a topic for another day, is linking the periodicity of wars to economic contractions. But this one's different, to your point, in that increase in interest is, and even though it's a terrible chart crime, right? Because they start at whatever, but horrible chart crime, but it is a big increase. And we're getting close to a level of the budget that we've never seen, not even in the 30s. And at some point, we'll run out of people to tax, and we'll run out of missiles to send into the desert to pump up GDP so we can increase corporate taxes. And so what's left? Default. Well, we ain't going to default. So, all the tweets of Joe Biden's going to default on it. No, he's not. No, we're not going to default on the debt. Now, will we devalue it? Will we deflate it away? Will we print so much money that, QE comes back and that those charts flip again? Yeah, that's what's going to happen, because it has to happen. Look at the balance sheets of all these banks. I mean, they were going crazy. Well, then what happened when they raised rates? Boom. Unrealized losses. Shit. What do we do now? We bury our head in the sand and pretend it's not there. Yeah. Well, okay, what if there's withdrawals? Well, shit, now we got to sell some bonds, which is what happened to SVB. And look, Silvergate Bank taken down for crypto and because the guy was a bad guy. Signature Bank, Crypto Bank. Well, not really Crypto Bank, but you're a crypto bank. You're bad. Silicon Valley Bank, that wasn't crypto. Right? That was all caught in the Warren crypto. Yeah. That wasn't crypto. That was shit. Withdrawals. Because why? Because people woke up and said, I can make 5% in a money market. And so you had this massive inflow to money market accounts, dwarfed inflows to anything else in the mutual fund industry. And it was coming out of banks. And what you'll see, and I have it in my presentation later, is First Republic and some others, Signature Bank, tried too late to raise their CD rates to 5% to try to stem the outflow, but it was too late. And then the Thiel thing caused the flywheel to come off. And so somebody has to buy the bonds. And it's going to be the lender of last resort again. So QE will come back. Or, this is what I've talked about this for decades. It could be that they pass a law that makes it the law that you buy bonds in your 401k. That could be.
The banking failures and crisis have been attributed to various factors. One major factor contributing to these failures is the occurrence of bank runs. Bank runs happen when depositors rush to withdraw their funds from a bank due to concerns about its financial stability. In the 2023 crisis, a major lender to the tech industry experienced a classic bank run, leading to its failure. This highlights the vulnerability of banks when faced with mass withdrawals. Additionally, there is the possibility of a global credit crunch as the potential next phase of the crisis. A credit crunch occurs when the availability of credit becomes restricted, making it harder for individuals and businesses to borrow money. Such constraints on credit can have a ripple effect on the overall financial system, potentially leading to further bank failures and a broader financial crisis. Regulatory issues and central bank interventions also play a significant role in addressing the crisis. Regulators and central banks have been implementing measures to prevent a widespread financial crisis. Their actions and policies aim to stabilize the banking sector and restore confidence in the financial system. While the exact causes of individual bank failures may vary, the combination of bank runs, the possibility of a credit crunch, and the need for regulatory intervention collectively contribute to the observed banking failures and crisis in 2023. As for Mark Yusko's interview, it would be best to share your opinion in the comments section below. For more Daily Dose Crypto news, check out these two awesome videos on your screen. Click now and we will see you on the next video.